Welcome to today's video. We are going to be talking about why interest rates do not matter. Yes, you heard that right. And I already know there's going to be so many of you that watch this video that are going to be hating and talking all kinds of junk in the comment section below. So fire away based on this title. But for those of you that don't, I hope you take away some valuable information because my name is Seanu Uyehara. I'm an area manager with Geneva Financial, and I created my YouTube channel to help you understand the ins and outs of mortgage and the real estate world. So hopefully you can take a little bit of information, feel more confident in your purchase or refinance to be able to move forward and get the best deal that works for you. If you have any questions, you can hit the description. My email is located below, and I'd be more than happy to answer your questions personally and help you with your purchase or your refinance. Now, I know this title might sound a little confusing, the fact that we're saying interest rates don't matter, but if you know my channel, I've said this a number of times. I always say that options and strategy are more important than the interest rate. The interest rate, anyone can quote you that. It doesn't necessarily mean you're getting a good deal. However, the big misconception in real estate and in the mortgage world when you're looking at buying a house is everyone picks a lender by their lowest rate. But that doesn't necessarily mean that that lender is offering you the best deal. And if you argue that point, I would easily say, well, whoever the cheapest lender is, why doesn't that bank do all the deals out there? They simply don't. And the business is spread amongst hundreds of lenders and banks across the country that offer mortgages because every single person is not going to fit. It's not going to work for that deal. That bank may not have a certain product. So the interest rate is not the end all be all way to decide on buying a house, refinancing your home. You want to make sure you look at strategy and the best option so that way you get the best deal. Now, the interest rate itself, the interest rate is literally a percentage of the loan that you as a homeowner get to borrow from the bank in order to buy your house if you're not paying cash for the property. The rate is an important part of the process and an important part of qualifying and becoming a homeowner. There are many pieces to the puzzle that comprise to make the larger picture. In my opinion, one of the most important things is your overall financial situation. Something as simple as having a stable job, having stable income. Are you even considering that when you're buying your house, or are you just rushing out to go and try to buy a place? As a lender, we're looking at the last 2-year history of what you've earned and what you've been doing year to date. One of the biggest hurdles in buying a house if you're self-employed is that you write off a ton of your income. So even if I could give you a 3% interest rate, if you have no idea how your CPA is filing your taxes and the fact that you're writing everything off, guess what? You're not going to qualify for a 3% interest rate. You're going to get a different interest rate because there's a different product for somebody like that. There's simple things like understanding your tax returns and understanding your overall credit situation that could get you into a better strategy on buying your house. But if you ignore those things, you may never become a homeowner because you're fixated on the wrong thing. And here's the other thing. You might look at interest rates, and so many times we see their advertisements. You do a Google search, you go to a bank, you see these low interest rates, and you think, oh, great, that's what I'm going to get. Shockingly enough, none of us read the fine print to this day, which is still crazy to me because you have to know that you have to meet certain guidelines in order to get that interest rate because it's being advertised. And that's why there's usually an asterisk next to it. So you got to read the fine print. If you read the fine print on any interest rate advertisement, they will tell you what requirements you have to hit in order to get that interest rate. And more often than not, it's going to be a certain loan amount, a certain credit score, a certain occupancy, a down payment, and potentially where the home is located. So there's all these factors that literally go into making up what the interest rate is, that you might be looking at that and just saying, well, that's the rate that I deserve to get, which no one deserves a rate. It's all based on what you can actually afford. So if you don't meet the requirements, you're not going to get the advertised rate. So again, does that rate really even matter if it says you have to have a 720 credit score and you have a 650? No, now it's the best strategy. How do I get into the house that's the most cost-effective way with a 650 credit score going with an FHA loan versus a conventional loan putting 25% down? All these things start to matter. And this is why the experience of your loan officer matters so much, because if you're working with someone that doesn't understand that, they're just going to throw you into a mortgage. And what do they care about your finances because they're just trying to get a commission check. Now, here's another thing that drives me crazy. Interest rates change every single day. Every single day. And as we're shooting this video, interest rates about a week or so ago dropped by about 0.5%. So if that happened, how many of you that are sitting on the sidelines were able to lock that interest rate in? And I'm going to guess probably a few, maybe, probably none, because you're waiting for the right time to get into the market to buy a house. Well, guess what? You might have missed that opportunity. And a bigger argument I always have is, well, if we all wanted the lowest interest rate, why didn't you buy during 2020, 2021, when rates were in the 2s and 3%? No, you didn't do it. So stop trying to time the market, because doing that is only costing you money. You missed the opportunity in 2020 when rates were in the 2s. You didn't buy a house that you could have bought for $300. It's now worth $500 and rates are at 7%. There's always going to be something that's going to make the market a little more challenging. So you need to buy when you can afford the purchase. And you might say, Sean, well, that's why I didn't buy in 2020. I wasn't ready. Well, there you go. That's exactly why I talk about this. Strategy is so important, and understanding your finances is so important. So because you weren't financially ready 2 years ago, 3 years ago, you missed the boat. Cost yourself a few $100,000 in equity buildup. And if you bought a house today, look at the amount of interest that you would pay on a 7% loan versus a 3% loan. You're going to cost yourself hundreds of thousands of dollars there if you kept the loan out for 30 years. So those types of mistakes happen every single day, but it's not anything to beat yourself up about. Let's just know that let's look for the best strategy going forward with the situation that we're in today. And you may not be in a perfect situation. When I bought my first house, I sure as hell wasn't in a perfect financial situation to do it, but I made it work. I knew my number one concern and focus was I needed a place to live. So I didn't care rates were 8% at the time. My interest rate, I think I locked and closed at was like 7.5, 7.6. It didn't matter to me. I needed a house. I needed a roof over my head. And guess what? I had 2 roommates that were willing to live with me and help me split the mortgage. So for us, it worked out. And again, I still own the house to this day. It's made me a lot of money. And I would never regret buying that house because it's something that has helped me buy other properties that I own today. So skipping out on that initial investment, skipping out on that initial step, if I was waiting for the perfect time to buy or the perfect interest rate, I would have never gotten into the game. So getting into the game is so important, and don't let little things like that hold you back. Now, interest rates do play a big part in you buying a house. Yes, we have to address how much money the mortgage payment is going to be because that affects how much house you can buy. But as we've seen interest rates go from the 3s to the 7s where we are today, buying power has reduced quite a bit. So again, how do you get some of that back? Many of us weren't even looking at interest rate buy downs at the time because rates were so low. But here's the problem with really, really low interest rates. When rates got into the 2s and to the 3s, property values started to skyrocket, which means you as a buyer, you were now chasing the market because you couldn't buy the house for $500,000 because as soon as it hit the market, there were 30 offers and the next guy was willing to pay $600,000 for the house. So what did you do? You went back to your lender and you said, hey, how much house can I qualify for? You wanted to go higher and higher and higher and higher. But then guess what happens when the market turns? Now we're in these inflationary times, these potentially recessionary times. You might lose your job. And now what? You chase the house for no reason. These are the types of mistakes that we make as Americans every single day for no reason. Because we're trying to chase something that we're getting outside of our comfort zone. We're chasing things and not understanding the process. We're doing things and not understanding the strategies and options that are available. Why? Because we chased the interest rate. Rates were the 2s and the 3s, and you said, I got to buy a house now. Well, could you really afford it? Or were you chasing the market because your friend bought one and home prices were going up $50,000 every single week? It sounds almost like 2005 and 6, if you ask me. So if you're in the process of thinking of buying a house, I urge you to not be so focused on the interest rate. I know it matters, and I know you're going to say you want the best deal. I get that. But I would challenge you to talk to your loan officer and talk about strategy. What are some other ways that you can buy the house? Do you have to look at a 30-year fixed mortgage? Can you look at 25? Can you look at 20? What's the difference in those payments? Does the interest rate get a little cheaper because you have a shorter term? Typically it does. But is your loan officer even giving you that information so you can decide for yourself? Are you looking at adjustable rate mortgages? Are you looking at a 2-1 buy down? Are you looking at maybe adding a cosigner to the mortgage? Is your loan officer telling you to maybe pay down some debt to get your credit score up a little bit higher so maybe you get a better qualification? Some of these things need to be discussed. Some of these things, unfortunately, never get discussed. So I urge you, if you're in the process, talk to your loan officer about strategies and options. Any good loan officer out there should be able to show you at least 2 to 4 options on how to buy a house. If they can't do that, or they look at you like you have a third eye if you ask them about that, you might want to shop around and find someone else to work with. Now, if you need a second opinion, that's what I'm here for. I'm happy to work with you and give you some other options and strategies on how to buy a home so you can be successful. That's number one goal here. We want to make sure you're doing the right thing and you're not getting in over your head simply because you watched a YouTube video about you need to buy a house in 2023. So share this with someone who could use some advice and making sure that they get the right house and the right loan for them. I'll see you on the next video.